Welcome to the Bigger Cash Flow podcast, where we interview business owners and real estate investors that share tips and tricks on how to grow your cash flow and reach financial freedom.
What's up, everyone? Welcome to another exciting episode of the Bigger Cash Flow podcast. Today, I have three of my good investor buddies from Indianapolis on the show. Some of them are remote, some of them are local to Indianapolis, and I felt like it was a good opportunity for all of us to just get in a Zoom session together and talk real estate amidst of everything that's going on in the world with COVID-19. So why don't we kick things off with Nick over here? If you can give us a little bit introduction about yourself, and then we'll take it around the group.
Yeah, absolutely. I am a W-2 employee. I live out in the Bay Area of California, married to the love of my life with two incredible dogs. Been investing in Indianapolis for about 2.5 years now. Got about 50 doors, give or take. And the majority of those units are long-term buy and hold rentals.
All right, Dan?
Yep. Yeah, Bo, thanks again for having all of us on today. My name's Dan Perez. I'm an investor out of San Diego, California. Similar to Nick, I am also a W-2 employee, so I do real estate investing on the side for passive income. I do the investing alongside my wife, Kelly, and we are primarily buy and hold investors in Indianapolis. We've done a couple flips over the last year and a half, but we mainly focus on buy and hold. And then we are also partners in an apartment complex in Kansas City. We chose Indianapolis for the job growth, population growth, and the ability to cash flow with our long-term rentals. And we've been able to build a great team over the past year or so. And we look forward to building out our portfolio in the years to come.
All right, Mahir.
Hey everyone. So first of all, thanks for arranging this, Bo. I got to see Nick in person for the first time, so that's pretty cool. So just like everybody else, I'm also a W-2 employee. I'm an electronics engineer. I moved to Indiana 8 years ago. Born and raised in India, so everything's been going well with engineering, and then suddenly I was hit with this like real estate fever. And ever since then, it was convenient for me to like invest in my backyard, so it kind of made sense for me. I started investing in the beginning of 2018. I'm currently at 40 plus doors. I currently do a bit of like flips, wholesales, Airbnb, and buy and holds.
Awesome. Definitely want to dive into wholesales a little bit later, but
Absolutely.
So yeah, just opening up the floor for you guys. I guess, how is the month of April right now? As of this recording, we are this is April 19th. And I'm actually going to publish this episode right away, just because I want the information to be timely. You know, information is getting stale basically every week. So I want to publish this as, fast as I can. But, for you guys, how was the month of April? If you guys have any advice on how to deal with the tenants and managing your property manager, if you guys do use third-party property management, in a crisis and time like this?
Yeah, I'll lead it off. This is Nick. April was a tough month, totally transparently. There's a lot of questions around, how we were going to be able to interface with our tenants, how we were going to be able to interface with our property managers. And Dan and I definitely were texting throughout the month quite a bit with some concerns. For me, I'm currently sitting at about 95% financial occupancy at this point. And what I mean by that is about 95% of my tenants have paid. Only one tenant actually is kind of ghosting us at the moment. So, and then the rest have been communicating, working with us, and kind of moving forward. So it's definitely been tough. 95% I will absolutely take at this point. Though throughout the course of the month, I was sitting at like 50% vacancy a week ago. So It was definitely pretty scary. I've been just texting, working with my property manager, the entire team, basically every single day, but really just letting them know, hey, I'm on top of this. we're working together. I appreciate your efforts, but yeah, it's time, please let me know where we stand on every single property. And they've responded pretty darn well to that. What I'm doing moving forward, and I don't want to hog too much time here, is I'm actually offering a discount to tenants who pay by the first of the month. So I'm offering a $50 discount if you pay by the first. And what I'm hoping to do with that is say, hey, I know this is a hard time. I'm willing to give you guys a discount if you're willing to help me with my cash flow situation.
Wow.
That's pretty good.
Yeah, I'll have to kind of echo what what Nick faced this month. We definitely faced some difficulties, and we still are in that position of trying to collect rents. Nick's seen better numbers than we are across our portfolio. I would say about 85% of our tenants have paid at this point. But when I was actually on a message with another investor this morning, he had asked, well, what percentage of dollars have you collected? And so when I ran that number, we're actually closer to 70% rent collection, even though 85% tenants have paid. So we are facing some of our larger rents have not been collected as of this point. They have been in communication with our property manager, which I believe is the most important thing. If you're ghosting us, that's where I'm getting concerned. But if you're at least working through this process with us, then we're willing to work with you and get through this time together. And I know one important thing that was really effective across all the property managers we work with is they were all very clear that we realize this is a difficult time for everyone, but rent is still due. Yes, we can't evict at this time, but we are still expecting rent to be paid. Please provide us with where you're at as far as your financial situation. If you were laid off, if your hours have been cut, just give us a little background on what you're working with. And then let's move forward with either a payment plan or when you think that you can actually submit payment. And that's all we're asking for. And majority of our tenants have done so, but we're in the same boat as Nick, where we have one tenant that is being fairly difficult, but it's part of the game.
Yeah. Hey, so, for the both of you, I know Nick self-manages a couple units, but you guys, I would say that's a pretty good collection rate amidst everything that's going on. Did you guys proactively communicate like a plan with your property managers, or is it kind of let's wait to see what it looks like, and then you guys kind of deviated from the game plan?
I think we've got Dan and I actually share, at least for some of his properties, the same property manager. I think we've got a competent property manager, and with that said, I still was very proactive with him, and I wanted to let him know, hey, I was willing to partner with any tenants that were going through a hard time. I thought that was important. We're kind of stewards of the community, and for me, that was definitely important. And I actually wrote an article to post it on Giulioni.com. I'll hype myself up here a little bit, but where I kind of laid out the criteria by which I would be willing to work with tenants. And I shared that with my property manager, Sterling, over at Ethosity, and made it pretty clear that this was my stance.
And on that same note, did your property managers have like a generic like mass email sent to all of their tenants, or was it like a tailored kind of like one-on-one for each of the tenants who had an issue? For me, they did not have a mass email. I'm curious on your thoughts on either or.
Yeah, I think there are advantages to both approaches. Thankfully, I think the right approach was taken by my property manager in saying, hey, he mass communicated, rent is due, and come talk to us if you guys are in a tough spot. That said, I don't think he sent like a mass email explaining all the programs that would be potentially available. Is that your understanding as well, Dan?
Yeah, correct. Yep. And I know all the property managers and other investors that are going to watch this are probably going to laugh at this, but Kelly and I are very type A investors. We love staying on top of our tenants, our property managers. Where do we stand? What is the game plan? That's just our personality. I think it's very well known throughout, and we don't shy away from that. That's just how we run our business. That's how we conduct our personal life. And it's worked out really well for us. And our property managers have really helped adapt that style with us in our portfolio. And I think they have done a great job with collections. We understand the type of tenants that we rent to across the board are all in different situations. Some are in the restaurant business. They work at the bars. Others have other blue collar jobs. So we realize across the board, whether it's a B or C class property, we're going to face different obstacles, and our property managers have really done a great job.
Yeah, no, that's why I love talking real estate with you, Dan, because I know when we talk about a topic, whether it be property management, acquisitions, or lending, you kind of got your bases covered. And as soon as I set this meeting, guess who's the first one to say, "Hey, Bo, do we have an agenda for this call?"
Always got to be prepared.
Yeah, I love it.
That's awesome.
Yeah, what about you, Mihir? How was April?
So April was not as brutal as I thought it would be. So I've had 5 late payments out of my portfolio. One of them did not pay the entire rent, but the other 4 they paid partial payments, which I'm okay with. And they kind of gave a heads up to our property manager, so we were kind of okay with it. I think my only deal was, if you see a hardship coming, just let us know so we can work with you. So it's just don't ghost us and be like, hey, no, we're not going to pay you flat out. We're asking for proof. We understand it's a difficult situation, so just kind of, we need to like work as a team to get through this. And the stimulus checks have definitely helped. So I think yesterday when I checked it, we've had a couple of late payments that kind of like covered the whole thing. So overall, it's not been bad.
Yeah.
But I have a couple of vacant units right now, and I think the biggest impact is to not getting people through the door to kind of do the viewings. So more than the rent collection, I think the vacancies would hurt quite a bit.
Yeah.
Can I just chime in there about vacant units? I actually think that's an interesting one. I think it was a pain point for Dan and me for a while with our property manager. There were debates about the efficacy of a program called Rently, where it's all about self showings.
Right.
And that has been probably the greatest benefit for me over the course of the last month, is the fact that I've got lock boxes on all my vacancies and tenants can actually go and self-show. So while I wasn't necessarily sold before, right now I'm totally sold on that service.
Yeah, I think different times call for different strategies, and I can see where, right now in the midst of everything that's going on, because I'm talking to my property managers as well. I have probably about 7 units that I need to fill, and they're trying to get agents to do the showings, but some of them are concerned. It is a valid concern, and they're not willing to go to show the apartments. So there's things like that we need to figure out. Okay, what do we need to do, or is it just kind of like a wait and see? But yeah.
Bo,
sorry, go ahead.
One point on that, Bo. I know we share a similar property manager as well on some of our properties, and one thing that they mentioned on a call this week was it also depends on where your properties are at. They're actually noticing a lot of the properties outside the loop or closer to the loop are actually renting a little quicker right now, just because a lot of the properties that I own, whether it's near Fountain Square, Bates Hendricks, a lot of those are people in the restaurant business or that type of service industry, where normally it's booming. They're willing to pay the higher rents, the nicer properties, but right now that's the industry that's being the most affected. So they're actually noticing houses out in Lawrence or Devington or wherever it might be that are renting a little quicker right now, and they're having a lot more traffic and interest on those properties.
Yep.
Absolutely. And I think I'm curious to get you guys' take on this. Have you guys been doing the written approval from tenants, or even like any prospective clients, to get people through the door, just so that they don't hold you harm in case something happens? So that's something that we've been trying to do, because I think most of them are kind of scared to come in contact with agents, or like leasing agents. So I think one thing we get them to do is just get them to sign a piece of paper saying, hey, we understand the situation, this is how it is, and you kind of like we need to maintain social distancing and just take your precautions, but don't hold us harm.
Oh, I see. Kind of like a release of liability.
Yeah.
Okay, gotcha.
It's
Yeah,
a smart idea.
I haven't been doing that, but yeah, that could be a potential area of risk. So yeah. Okay. So I guess for me, I also had about 94% financial occupancy that I collected on. So about 4 of my tenants, either they, one of them, unfortunately, they were both business owners. They both lost their jobs, so they did vacate. So I didn't have to go through an eviction process. They vacated it within a week. And right now I'm getting a quote for the rent ready. And then the other 3, it's just one of them's like a normal turn, so their lease ended and they decided to move to a different place. And then for the other two, they haven't been paying. They've paid a late partial payment, so I need to collect on the others. But I feel like I am better prepared with this situation almost because I've dealt with a lot of Section 8 tenants in Kansas City. And that's kind of like the name of the game in Section 8, at least based on my past 3 years experience, is, I have a couple tenants where housing pays everything, like $850 a month in rent, like clockwork. I love it. Like at the first of the month, it's an ACH straight into my bank account. I have other tenants where it's like housing pays $700 and the tenant owes like, $150 or $50. And they sometimes really struggle with that. So they will pay me like 25 out of the 50 or 100 out of the 150. And so I have to keep a receivable log to keep track of all that, like to talk with my PM and all of that. So I feel like if there's any tenants who are just normal market rent tenants who are dealing with COVID and struggling to pay the full amount, I kind of put them in the same bucket as, okay, it's just another day where I was dealing with the Section 8 tenants. But I think to your point, Mahir, the stimulus check, hopefully that will help. People
Yeah.
will hopefully pay their rent before they buy any other toys.
Right.
So yeah, I'm pretty optimistic. My only other concern is, from the macroeconomic things, maybe it's not going to impact our tenant from a day to day, but I feel like with Q1 earnings starting to come out next week, I'm just waiting kind of for the other shoe to drop.
Yep.
Because we have been kind of facing like I think things are getting better now. Things are getting better now. And then not to get off on a huge tangent, but I'm a believer that it's not the market or the economy that really drives the stock market. I feel like sometimes it's the other way more recently, where people like get fearful and they sell, or, the stock market gets impacted. And then everybody's like, okay, we're in a recession, we're in a bear market. So I don't know. I guess maybe we could talk about that for a brief minute. What are you guys' thoughts on that? And are you guys like doing anything to prepare for the next, I guess, downturn in the stock market? Or are you guys thinking it's going to continue to trend up?
I guess I can go first on that one. For me, I don't actually have all that much invested in the stock market. I tend to focus more on the real estate side. I have my 401k from my W-2 in the stock market. I've got a little IRA in there as well. But from a high level, that's not something that I focus a lot on. It's not something I can control. So for me, I like to invest my time and energy into the things that I can actually go make an impact in. So for me right now, it's all about building up cash reserves. I don't know what the next couple months are going to look like. There are a variety of different, proposals out there from a mortgage deferral perspective, from a potentially rent forgiveness perspective. So I am just in a complete defensive position at the moment, where I want to get as much cash in my pocket as humanly possible, so that if something does happen, I can weather it. But then secondarily, if opportunities come up, I want to be able to grab them.
Yeah. So with that said, sorry, on that topic, are you making any acquisitions right now, or holding off at least for like a month or two?
I think I'm holding off for the moment. I don't think it makes sense for me right now. Particularly, we grew really, really fast, and totally transparently, we probably were, I don't want to say reckless, but a little more aggressive than the average person, because my wife and I are both well employed and we live well below our means. So for us, I think taking a breather and potentially benefiting from a downturn could benefit us quite a bit.
Yeah. Taking like a step back to take 3 steps forward. Yeah. No, I like that.
Yeah, Kelly and I, we are nerdy accountants, and so we always have a fairly solid reserve account stashed away. Obviously, we weren't expecting something like the virus to break out, but we always do have that reserve account just to give us a peace of mind and our investors at the same time. I think that's one thing that's really appealing to our investors, is we say, hey, we are borrowing money from you for this acquisition, but we do have funds of our own, but we like to have that as a reserve just in case something happens. So, it is helping us through the situation. But we're taking a little bit different approach than Nick and Diane, in the sense that we are actively still looking for deals. We're just being a little bit more selective on the rental side right now. As we previously discussed, I think the difficulties are happening on the PM side, where it's leasing the vacancies. It's finding tenants that can pay during this. And so I've noticed that on the rental side, we're being a little pickier, but we're still looking for flips. The agents that I've spoken with in the market have said flips are still moving pretty quickly right now. The inventory's not super high, so if you price it right and if you put out a good product, it will sell. And so we are looking at a couple flip opportunities right now. But again, we do have some reserves in mind that say, hey, don't go after every deal, but be very selective and take the deals that make the most sense for us.
Yeah, let's talk about reserves for a minute, and then I think we'll segue into should we still be buying, and get all of y'all's thoughts on that. In terms of reserves, do you guys have like a set amount per property based on, how much the property is worth, or is it based on, the rents, or maybe a little bit of both? Like, let's just say like, I don't know, $2,000 per property, and then you keep adding like 8% a month to it if it's occupied. Like, is there kind of like a math behind it for you guys, or is it more, hey, across my portfolio, I want like 80K in the bank or 50K in the bank or something like that?
Mine's the latter. It's Kelly and I have set a dollar amount that we're comfortable with keeping in the bank, and we're saying, I know that we're not necessarily making money off of this, but it gives us a peace of mind, which means just as much to us. That's just us personally. Some people would say, you're sitting on X amount, why don't you go spend that and have a return on your investment? For us, we'd rather have that in the bank for situations like this, so that we're not staying up late at night wondering, are we going to have enough to pay our mortgages and take care of our private money investors?
Oh yeah, for sure.
Yeah, we're generally sitting on about 3 to 4 months worth of rent in terms of reserves to help us weather, if a furnace goes out, or heck, if there's a global pandemic. We're relatively prepared for that.
Okay.
So as for my rentals, since I do my own rehab and tenant turns, and even on the acquisition side, when it's a crappy property, I do the rehab myself. So what happens, I have a general idea of what each unit would need. So for example, if the roof, needs to be replaced in 3 years and I don't replace it immediately, I kind of, at the back of my mind, have a number for each unit. So I kind of know what condition it's in. So I just kind of like factor that in. Like we know, hey, it's coming down the road. So I just kind of have those numbers available.
Yeah.
But I don't have like a set percentage or anything.
Yeah, and I think this discussion is a lot of value add for a lot of investors, especially if you're newer or if you don't have a lot of experience. Mihir, in my opinion, can run a lean operation because he has a very close pulse on his properties, and he knows like what condition they are in. They're local. For some of the investors who are, out of state, relying on third-party management, I would encourage you guys to take another hard look at your reserves, your property condition, because sometimes it's easier to fudge the numbers and be subjective and be like, oh, I think my 10 properties, they're in a better shape than you actually think it's in, right? And it needs a little bit more work than you think it's in. So I would really encourage you guys to use this opportunity, if you guys are holding off on acquisitions or waiting for your flips to sell or whatever it may be, to really take a look at that reserves balance. I think that's important.
And Bo, to touch on that point, I have a lot of investors that are looking to get into the indie market, and they'll reach out and say, hey, I have 30, 40, 50,000. How would you spend it? And I often caution them that even though you have that money, doesn't mean you have to spend it all on a property.
Right.
You want to cut that in half. That's what you can invest. The other half, keep it as a reserve for when that furnace does go out, or if you do have some sort of vandalism, which is increasing over the past couple of months. So there's a lot of things that you don't even expect to pop up that will pop up. So it's good to keep that reserve account.
Yeah. Or you can just go to Mihir and make that dollar stretch like 4 times more, because he gets everything for 20 cents on the dollar in Indy. So no, slightly kidding, but no, Mihir is really good at buying stuff at a discount and doing the rehab. So okay, so let's transition over to should we be buying? I think that's That's probably a question that I saw like every day for the past 3 weeks on the forums and like Facebook groups and whatnot, is like, hey, are you guys still buying? Are you guys still buying? So what are you guys' thoughts on that? Whether it be buy and holds, and then I guess we can separate it to asset classes, like just single family and multifamily. We're not going to go into all the other classes. And then as well as flips. What are your thoughts on that, guys?
So
Uh,
Mahir, I'd love to hear from you, being the
uh
local out there.
Yeah. So as far as like my strategy, so I've not been doing a whole lot of buy and holds for the past few months. I've switched gears to Airbnb and flips and wholesales. Um, right now in this market, I personally would not do any buy and holds. I'm completely focused on flips, or hitting up Dan when there's a good deal in his neighborhood, or doing like rehabs for other investors that I know. As far as flips, I have a couple of data points for that. I recently put this is a couple of weeks back. It's the ARV of the property is 230K, and I bought it for like 150ish. I put in $500 in wholesale. I just like clean it up, fix the minor issues, and then put it back on the market the very next day. And it's currently under contract for like 190, and I got over asking. And the reason for that is it's outside the loop and it's in a really good area. So this is like owner occupied, no renters. So that kind of location. So I feel like that's a pretty good data point. And to kind of like attest to what Dan said, there is a shortage of properties in the market right now, like good quality owner occupied homes. So I believe if you hit the right spot, the right neighborhood, you would still see some offers come through. But just from like a data point of view, the number of people walking through the door to look at properties has gone down significantly. So, that's something to keep in mind. But if it's in a good neighborhood, you're kind of like increasing your odds of getting the property sold versus going into the C-class flips. And Airbnb has taken a major, major hit. So I have 4 listings right now, and I've had to significantly cut down on my nightly rate. So it's not as profitable, but you still see some traffic every now and then, mostly from the medical personnel. I hope that answers your question.
So on Airbnb, before we go back to like buy and hold and whatnot, so I have a couple buddies who, range from maybe they have 8 units to I have another buddy who in Texas who has 26 of these. And what they have found is they've converted about at least 1/3, like 8 of them, to monthly rentals.
Yeah.
And they were able to do that in the past week and a half. So it looks like some people are finding some success to do the monthly rentals. I'm curious, is that like a strategy that you're planning on going down?
Yeah. So out of the 4 that I have, 2 of them have booked for like over a month now.
Okay.
So I haven't like specifically advertised it to be a monthly rental, but I just opened up my calendar to the point where they can stay long term. So that automatically made them book for like, I think 40-ish days.
So who are these people who are booking for over a month? And also, and my buddy who has the 26, he has his own website to foot traffic. That way he does his own SEO and not just relies on Airbnb. So I guess what's your marketing strategy as well? I feel like some listeners would benefit from that.
So the 2, not surprisingly, the 2 that got rented, one of them is close to one of the major hospitals on the south side. So the nurse that's staying there, she's a traveling nurse from, I believe, Ohio. She's here on like a contract. So she'll basically stay the whole length of a contract, which is like 45 days. And the other one, this I found really interesting. This couple, they were not allowed to go back to New York because of the whole condition back in New York. So they booked their stay for a month. They're scared to go back home, so they said we're pretty much quarantined in India, and that's where we'll be for next month.
Yeah. No, yeah, things are pretty crazy over there. So actually, that makes a lot of sense.
Yeah.
Like, you had something to say?
Yeah, I had just converted one of my units into an Airbnb right before all this craziness, and kind of following Mahir here. It ended up being a traveling nurse who took it for 2 weeks. I think we've got a doctor coming up in another 2 weeks. So if you've got rentals in those particular markets right near hospitals, that could be a really awesome potential market. You can get on not just Airbnb, but there's like Furnished Finder is I think another one.
Right.
Also, Facebook. Facebook ads have been absolutely killing it for me from placing people.
Nice, nice. Awesome.
I don't have any Airbnb, so I can't speak on that. It was something Kelly and I were hoping to get into at some point this year or next, but it's not something that we've currently taken on yet.
Got it. What about the buy and hold, Stan?
Buy and holds, like I said, I think the biggest hurdle right now is actually on the PM shoulders. It's that on the units that are occupied, it's getting the rent collection, working with those tenants through their tough times. I think it'll continue to be tough the next couple of months. But then the vacancies that we only have 2 vacancies right now. It looks like one we're going to fill this week or next. The other one is near Fountain Square. That one has been sitting for a while. So I think it's just, it's affecting the amount of traffic that we're getting into the properties right now. And so going back to your initial question, should we be buying? I think it's just up to your risk tolerance and the type of team you have built out. Might be tougher for someone newer that doesn't have a lot of a high tolerance for risk. I would say maybe hold off. But if it's someone that knows the market and is willing to take on the level of risk, if you can get it at the right price, I don't see why you wouldn't pull the trigger on it.
So what about your criteria? Let's just say, I'm throwing out numbers. If you're looking at like, I don't know, 15% cash on cash with 200 a door prior to COVID, does that necessarily change post-COVID or amidst COVID? Like, are you looking at more of a higher return with everything that's going on?
I think the biggest change that I'm making right now is in my pro forma. I'm increasing that vacancy percentage. So that's where I'm taking the biggest hit. As far as the other numbers, I think it's all up to, I mean, I'm kind of pulling random numbers out of thin air, just trying to somewhat use what's happening and try to tailor in our pro forma to be the most accurate. I know for a fact vacancy is going to increase. So that's the biggest number that and I've changed. But then on the flip side, we normally try to buy these properties to where we can be 70, 75% all in. We're trying to hold ourselves being under 70% all in right now. And that way it's like, we're only taking on those excellent deals, whereas it might've been a good deal and we take it on. Now we're just looking for those excellent ones during this tough time.
Yeah,
I agree with you, Dan. I think normally, I'd go for a discounted property, but I think in this time, it has to be a great deal. It needs to be a home run.
Exactly.
I think you're right on the home run. The other piece for me, and I agree with everything you guys have said here, is I'm trying to move up an asset class. That's been something I've been attempting to do for a while. And basically all my acquisitions are moving up in the rent stack. But for me, I'm really only going to focus on higher end units. That way I can get more likely a professional tenant versus somebody who is more likely to be affected by the inability to go into an office.
yeah.
Yeah, an interesting point on that. When I was looking at our rent roll, what we've collected and everything, fun fact, our 3 highest rents that we have across our whole portfolio are part of the population that hasn't paid us yet. So just something to keep in mind. I wouldn't have expected that.
Yeah.
We have 3 fairly high payments, and those are the 3 that still haven't paid. They've been in communication with us, but those are the ones that haven't paid yet. So I thought that was an interesting fact because we would have been on that same thought process. But those
Are they business owners, Dan? Do you know?
Yeah.
Okay.
Yeah, business owners. Yep.
Yeah, so for me personally, right now, I don't want to say I'm on hold, but I kind of am, unless there really is like a home run that I cannot miss out on. It needs to be like a no-brainer for me to buy. If there's anything that maybe I bought like in January, December, November, these past couple of months, if it's the same criteria, then I'll probably not buy, just because, with everything that's going on, like Nick says, I'm more focused on reserves right now and making sure I did buy 2 apartments earlier this year. So I want to make sure that those are completely filled as well. So although I'm still in the growth phase right now amidst everything that's going on, I'll probably hold if it's the same criteria. Now, also with that said, the reason why I bring this up is there are still newer investors, and especially with people staying home, I see a ton of ad for like courses, buying, rentals and all of that. So I just want to help people set expectations that amidst these times, I think, like Dan says, you have to increase vacancy, or you have to stress test it just a little bit more than just simply using like a BP calculator and say, oh, this kind of hits the mark for my first one. We'll just give it a go. And that's just my personal opinion. I'm not saying arbitrarily, just make it so hard that none of the deals work. It's just saying that if maybe one out of, like, I don't know, 80 deals worked in the past, maybe you need to look at literally 200 for you to kind of, grow your portfolio a little bit more safely in these times.
Yeah. And my wife put it perfectly. She was saying that it's somewhat out of our control as far as the tenants that we're placing. They might look good on paper, but once they get into these properties that we're placing them in, you run the risk of them potentially paying late, potentially not paying at all. Then you're getting a lot less foot traffic in these properties. There's a lot of things stacked against you with these buy and holds right now. Not to say that you shouldn't go into them, because a lot of people are having very high success. I know a couple of the Facebook groups I'm in, a lot of people are saying we have 100 people that reached out to me. It's like, that's fine. I think it could be misleading though, because of those 100, how many are actually qualified? Of those amount that are qualified, how many of those actually still have their jobs? So I think that some of the numbers that are being thrown out there are fairly misleading when people are saying, I have hundreds of people reaching out.
Yep.
That's awesome. But how many are actually going to be quality paying tenants? That's the number you should be actually posting on Facebook.
Yep. No, I agree with that. And I guess the second, side of that coin is that we talked about your criteria, the pro forma side of things, but the other thing is, the neighborhoods or the rent ranges, right? So if, let's just say, I'm mainly focused on C-class assets, do you guys necessarily move up to B or maybe even up to A? I mean, for me personally, I like to keep my tenant pool large. So what I've experienced is that for me, like that 750 to 950 range across my 3 markets, I think Little Rock is on the cheaper side of the rents, but Indy and Kansas City, maybe that 850, that area is kind of like a sweet spot. I have one unit that I'm trying to lease up that was 1050. And then I recently lowered it to 995 to be below that 1,000, just because it wasn't really getting that much activity after I talked to the property manager. So thoughts on kind of that in terms of areas of focus, because you're buying, Dan?
Areas of focus, I'm not sure I can speak too much on. I think it would be more so the type of tenant that you're leasing to. I think that is the number one driving factor. I work with 4 different property managers right now, and they've all said the same thing. It's the tenants that are in that service industry. Those are the ones that are being hit the hardest right now, because people can't get to bars and restaurants. But historically, those have been some of our strongest tenants that always pay on time. So I think this is, again, one of those one-off situations where we shouldn't overreact. You should pivot a little bit to combat what's going on. But I can't necessarily say that, hey, this neighborhood's great, this neighborhood's not. All I can go off is the numbers. And right now, all of my C-class properties have paid. It's my higher rent ranges that are not paying because of the industry. They're not necessarily because of the neighborhood that the house is in.
Got it. Anyone else have any thoughts on that?
I think my portfolio performance is kind of similar to Dan's. The C-class tenants have definitely paid. The C-class rentals, actually, the tenants are A-class. But the higher end tenants, around like $1,400-$1,500 range, I've had no issues with it. But it's an in between, where, like, the 800s to like $1,000. It just seems like that's the portion that is hit the most. I have a 4-plex that rents for like $575 to $650, and my assumption was, this will be hit pretty bad, but they've been paying. There's no issue. So I guess the extreme lower end of the spectrum, it's okay. The higher end people, like the nursing jobs and so on, they've been able to pay, but it's the people that work in the bars, restaurants, that's the one. That's the core section that got hit pretty bad.
Gosh, that's just so interesting. My the ones I'm struggling with most are the ones in the $400 to $700 range. Everything under, everything $700 to $1,200 has been pretty darn solid for me.
Yeah,
I think it's like an intersection of the area too, right?
Yeah, absolutely.
Yeah, maybe, if we kind of compare notes and cross-reference less than the rent range, maybe it, like Dan alluded to, it is
The
like
area.
the industry or
You're right.
the service sector or something
Yeah.
like that. So
I
that is
think this
interesting. Yeah.
also goes to show the point that if anyone is out there running around definitively telling you, here's what's going on, here's what you should do, here's what you should avoid, no one knows what's going on. And
Right.
see our 4 portfolios right now, we probably have over 100, 150 properties between the 4 of us. There's not one blanket statement that says, hey, if you buy a house in Bates Hendricks and rent it for $1,000, you will get rent collection this month. It's all across the board. It depends on what tenant you have in there. And I've seen people saying, well, I think this goes to show the type of tenant my PM put in these properties. That's not the case either, because it's industry specific. It's what type of job they have. It's
Yep.
not, I have a lot of qualified people that aren't able to pay me rent this month just because of the industry they're in. So it's tough to put a blanket statement on what's happening.
Yeah, for sure. Like my friend who was told, hey, in Memphis, Tennessee, he has like A class. It's about, $240,000. Say, oh, A class, you get the best tenants and all that jazz. That tenant just recently got evicted and did about $40,000 worth of damages. So
Wow.
yeah, so it's not been a fun time, but yeah, I don't think you can say definitively one way or another that, hey, A class tenants or B or C. For me, I place more trust on my property managers to do the right screening. And if they know their, C class tenants or B class tenants very well, I think you'll still have success.
Yep.
Yeah. So we talked a lot about, COVID and real estate so far, but is there anything else that you guys would like to add in terms of, the impact of this on the economy, whether it be like right now, immediate impact, or what you guys foresee? Nobody has a crystal ball. We're not predicting anything over here, but it's just our personal thoughts of how the real estate landscape is going to change, because believe me, I feel like it is going to change. How that's going to change, we're not entirely sure, but it's not going to be the same as, pre-COVID, in my opinion. What are your thoughts on that, Nick?
Yeah, I think the world's going to change. I think we can all agree on that. But at the end of the day, once the world goes back to relative normalcy, the advantages of being a real estate investor, really, particularly in the buy and hold rental space, are really going to show themselves. For instance, let's say that the economy does go in a negative direction. What that'll generally mean is that fewer people can afford a home to purchase for themselves, which means the rental demand is going to go up, which means our rents are largely going to increase, or at least stay the same. Now, conversely, if we go back to normal, the market continues to rise the way it has been and what we've seen over the last 10 years or so, then our values continue to rise and we're able to sell and trade up. So really, it's one of those rare situations where it's kind of a win-win if you're well capitalized from an investment scenario. We can talk about lending a little bit. I think that's actually something that's super important to get to. But from a high level, I'm feeling really good about being a real estate investor going into whatever is coming over the next several years.
Those are really good points, Nick, and to share what we're doing. Kelly and I, we take the approach, focus on what we can control. And I think everyone's going to have different opinions politically, medically, and based on our economy, what's going to happen. We obviously keep up with the news and what's going on, but our big focus right now was what can we control? And we broke it down into 3 things. It's basically make sure we're aligned as far as priorities go with our property managers. That's number 1. That's our biggest issue right now, is making sure everyone's on the same page. Number 2, make sure our reserves are solid. Going into this, they were, but we're beefing those up even more right now. We're putting more of our W-2 income towards that reserve account, just making sure, hey, we're solid there. We don't know how long this is going to go on. And then 3, focus on the long term. I think people are really quick to overreact to situations like this, and I think it's important to note what is changing, but still just maintain course on your long-term goals. This is a short-term thing that's going to have a big impact, but don't let it derail you from your long-term goals. And those are the 3 things that we're focusing on right now. We're not trying to really predict what's going to happen. We're just trying to control what we can.
Those are really good points, Dan. I think so. Just looking at our day-to-day work, right? As far as my W-2 goes, I mean, who would have thought that 20,000, 30,000 employees be working from home, right? And we're still carrying on our projects, delivering on milestones. this is huge. It's going to have a huge impact, especially on the multinational companies, right? Because now they will not find a need to rent out, $100,000 of building space every year. If once they realize all their employees are able to carry on all the tasks, that's a game changer, right? So that'll be some impact. Um, and the other thing is, I've noticed that the lending has gotten a little strict. I've recently touched base with a couple of lenders that I work with regularly. They're not giving away the loans as freely as they used to. So I found that pretty interesting. But I think overall, I'm pretty optimistic about the way everything has panned out so far. I think this is a good learning test for us. For I think when we met in Feb, we were all talking about, how did people react in 2008, right? When the real estate industry was hit pretty bad, what did they do? And I guess we're answering our own questions now.
Yeah.
So I think it's a good learning curve for us. I think that the stress test part is what I'm really taking away from all of this.
Yeah, just looking back, that meeting that we had in February, that couldn't have been more timely. Now, we obviously didn't know it would happen this quickly,
Yeah,
but some of the discussions that we had with Zuber on that call is very similar, right? He
yeah,
talked about lending tightening, and then some of
yeah,
the mom and pop shop investors really
yeah,
struggling when they weren't really well capitalized. You have to buy on terms, you have to buy at discounts, you have to stress test a little bit. So
yeah.
some of those main key points still play a big role in, I think, the future and what we're going to be doing. Yeah, so I think you guys touched on everything that I was gonna say. So I think if there's anything else, we can kind of switch
You
gears
know,
here.
this is just like a quick comment, but
Yeah,
it has been an interesting observation for me. Like whenever the stock market kind of tanks or it takes a big dip,
yeah,
real estate kind of follows with a certain lag. Like maybe not right away, but maybe like in a 3 to 6 month time frame, you'll see the impact on it on real estate through some way or the other. So I know if we were to see how the situation pans out, maybe in like 3 or 4 months, we'll kind of see the impact on real estate where homeowners might not be able to make their mortgage payments. So there's like more foreclosures, right? So and you're already seeing properties that were bought at the peak of the cycle, and now they're like underwater when it comes to mortgages. So you have short sales coming up. So there's like all kinds of possibilities in a few months down the road.
And Mahir, what about all the people that are taking on these forbearances and other relief programs that won't be able to pay up when the time comes,
Yeah.
when things come back and say, hey, you owe us all these deferred payments? What happens to those people when they
Yeah.
can't make due on that? So that's another
I-
thing to keep an eye on. There's a lot of people taking free money right now to help their current situation. But
Right.
when the time comes to pay those up, who's going to have
Yeah.
enough to actually pay it back?
Yeah. I mean, right now we're kind of assuming that things are going to be okay, like in mid-May or June, right? So what if there's like a second wave? Like I'm just throwing something out there. In the engineering world, you run like the worst case analysis, right? So when you do that, so what are we going to do when the rent payments drop like 50% of your portfolio? Like who's going to get wiped out or who's going to still stay, right? So these are some things to like keep an eye on. That's kind of why I think my personal strategy, is to just kind of like branch out to like the vendor services and also do some quick wholesale. So I'm sitting more on cash. Not so much for acquisition side of it, but more like for my own cushion, right?
yeah. No, I think that's two things that I want to touch on. There is, number one, the equity market. The reason why I brought that up earlier is because I work closely in my W-2 with a lot of public companies, and a lot of these clients who have, their stock traded, if that tanks or something goes, terribly wrong, whether their sales dip or whatnot, it's going to be reported pretty soon. Is, they're going to have layoffs and whatnot, and it's all over the news on some of these bigger companies, right? So that will directly impact our potential tenants and in effect our portfolio. So that's kind of like the reason why I am keeping tabs on the equity market. But it's tough to say what exactly is going to come off of that, because
Right.
even the unemployment application, like it's, I don't know, some ridiculous number like 25 million or something like that, compared
Yeah.
to every other recession. Like it's not even close, right?
Yeah.
To all the previous recessions. So I don't even know what to make of that number. It just seems so
Yeah.
intangible to me, in terms of getting some meaningful data out of that right now. So we'll see, like you said, what that would result in a couple months.
Yeah, this might be too soon to like make a judgment call.
Yeah.
We're kind of like assuming that everything's going to be okay in a month or so. But what if it doesn't head back upwards, in a month or so? So what's going to happen, right?
Yeah.
I mean, even in my personal situation, we're all taking a pay cut at our company.
Yep.
But some W-2 employees are getting laid off, like engineers are getting laid off,
Yep.
and not many companies are hiring right now. So it doesn't matter what spectrum you're in as far as getting a pay grade, but if you're without a job, it gets tough.
Yeah. Yeah. So these are all variables. And again, like to Dan's point, my philosophy is focus on what you can control.
Right.
However, understand these variables and understand these inputs that are changing so
Yep.
rapidly right now, so that when you are trying to make a decision on that acquisition, or, hey, should I do this flip or whatever, that you are kind of considering that in terms of the impacts, like the variables. So.
Yep.
I think that's a good segue to what I also want to talk about is your strategy, your real estate strategy, whether it be, buy and holds, flips, Airbnb, hotels. I think for most of us, it is constantly evolving. I don't think any one of us is like, hey, I'm a buy and hold investor from day one, and that's all I'm going to do, right? So like Mahir, you mentioned you're doing some hotels and you're doing some Airbnbs. Nick, you got, I think, 1 unit, you said. For me, in the beginning, I was strictly buy and hold, not doing any flips, not doing anything else. As you guys know, I'm doing 2 flips right now. There's definitely some lessons learned. Probably the worst timing to do 2 flips that are above the median house price in that specific area.
I'm with you, bud.
Yeah. But I mean, looking back, obviously hindsight is 2020. But I think one lesson learned for me is, if I look at it from what could go wrong, Mahir, you talked about what's the worst scenario. Dan probably knows. As accountants, we always ask what could go wrong. And I obviously did not ask myself this question that hard back in December.
Yeah.
So right now, I probably have about 12 properties on short-term debt. When I say short-term, it's less than 10 years. Right now, it's 18 months. So these are like bridge loans where they pay like 90% of the purchase and 100% of the rehab, and I come up with 10%. I do the burst strategy basically. So
Right.
A lot of these properties, they're cash flowing. They're about 60 to 65% LTV. So in a normal market, this is perfect. Now I just need to refinance long-term debt.
Right.
However, can I get that long-term debt right now? That is the question, right? So
Have you been having issues with that?
I am, and we'll definitely talk about that lending piece.
Oh boy, okay.
Nick and we got to talk about that piece.
Yeah.
So with Dan too, so that's being fully transparent here, that's an area of risk for me in my business, right?
Right.
I am scaling pretty quickly, and because I felt like I had a system in terms of I have the reserves, I have my contractors, my PMs are rock solid. So I just kept putting it into the pipeline. Once I get 10, I refi out. 10 refi out. It's just that this time I was about to get refied, and then this happened, right? And then in addition to that, I have 2 flips going on. So normally, probably even 4 months ago, I wouldn't have this much capital that I need to either refinance or sell out to exit out of. But right now I do. So I'm kind of taking a look at that. Lessons learned. I think number 1, maybe flips. I may have just done 1 and then gone to the next. This is being just me personally, totally honest, just because this was my first flip and I just went with 2. So maybe close on the first one and then go to the next one, just because my primary bread and butter is buy and hold. So that's my first, in a perfect world scenario, that's what I would have done. And then number 2, I think I would have gone for a quicker turnaround. So I went for a 3 to 4 month turnaround, which is again something that is totally normal. Say hello to your kitty.
Sorry, I tried putting her up in the basement, but she would not take it.
No, I love it. But yeah, like I think hotel is a great strategy. I think Mahir, you and I talked about this back in February.
Yeah.
When we were trying to actually do one together. Is that that's I'm okay with the time value of money, even if I make 1/4 of the cash profit. If it takes me like half or even less of the time to see that cash back in my pocket, I think it's totally worth it from a risk mitigation perspective. So a couple things that I wanted to throw out there, something that I'm dealing with in my business. I wanted to turn around to you guys to see, hey, what are some holes that you guys see? What are some opportunities for you guys to really strengthen your portfolio?
Well, I'll kind of go first here. Thankfully, I got started on a refinance on a bunch of my short-term debt. I think the day before the lending company, ended up kind of stopping new loans. So sorry to have beaten you in there. I got the last couple dollars. Currently in the middle of that refi process, which I'm feeling very, very thankful about at the moment. For me, though, I'm currently in the middle of one flip, currently in the middle of one burr flip project. Haven't quite made up my mind yet. What I think is going to be important for people moving forward is to have multiple exit strategies. If you're going to start a flip, be ready to hold on to it. Make sure it's something that you can rent out, that you might have to hold on to for a year, 3-5 years. Otherwise, you could be really sorely disappointed. The capital markets have really dried up. I've had 2 deals now fall through because I haven't been able to secure the right kind of financing. So definitely upset about that. But yeah, just go in with your eyes wide open. Make sure that you can, sell it, you can hold it, you can do whatever makes sense for you, but don't go in with only one strategy.
Yeah. And on that same note, with the flips, you might be thinking, hey, it's okay. I don't have to refi. I can just sell this thing. But then on the other side, unless that buyer is buying cash, that person needs to get financing too. So if the financing market has tightened where you can't refi, that person is probably going to be dealing with the same issue. So, some things to consider as lending gets more restricted.
I can't stress that enough what Nick brought up. Only close on deals that you would personally take it down. Uh, I think I've personally had had an experience of that. So I think Nick and I were talking about doing a deal together. It didn't work out for him. Uh, Luckily, that's something that I would keep for my own portfolio. So I ended up closing on it yesterday. Now my whole deal is to go do like a wholesale on that. So I'll keep you posted how it goes. But I think to your point, it's a very good point where if we ourselves are having issues with lending, I'm pretty sure everybody else would too. Uh, so we'll see how it pans out.
Yep.
Yeah, and Bo, to your point on the price point of your flips, I think I've made it pretty well known at the meetup that we all had in February. But when Kelly and I are flipping, we tend to look for properties that we can sell under 150. That's just a number that we've set just because of the amount of people in Indianapolis that can afford that price range. I know people have had a ton of success much higher in much higher price ranges than that, but that's something that we're comfortable with, where we're purchasing for 80, 90,000, putting in 10, 20, 30,000, and then flipping for 140, 150. That's just numbers that we're comfortable with because of the amount of people that it appeals to. So we've always done that, and we'll continue to do it. Just that's our comfort level.
Yeah, it really is based on your comfort level. So if you're looking for a nice 2-bedroom single family home, let me know. No, I'm just kidding.
See, I can't remember who said it, but as long as your flips are within that medium income rate, the median house price, you should be okay. If you're like too far out in left field with the median price of the city, you might run into some issues, especially in situations like this. But as long as you're close, like like Dan said, like 150, that's a sweet price point for Indy. So you should be okay if that's a flip.
Yeah. Yeah. So again, these are general, I think, rules of thumb and risk tolerance and what we're comfortable with. So obviously there are going to be people who listen to this and be like, hold up. Like I've had tons of success being 10% above the median price range and like selling 100 flips a year. Yeah, there are going to be those people. These are just general rules of thumb of basically what we've experienced to be in terms of our risk mitigation. So I just wanted to throw that out there. Yeah, so we kind of danced around it a little bit, but let's talk about the elephant in the room, which is going to be lending. So, anybody want to kind of kick things off in terms of what they're seeing right now in the market? We did notice that the capital markets have dried up, and a lot of banks, credit unions, commercial lenders, they're on moratoriums. So anybody want to kind of chime in here?
I just touched base with my couple of lenders that I typically work with. One of them is a national chain. The other one is a local bank. I've had good luck with both of them, but both of them were like, "Hey, no, we're not doing investment loans right now. We're kind of cutting down on the lending, having more restrictions." And they brought up a really good point of the exposure that investors have, especially, with the portfolio size that we have, and not many properties are like, free and clear, right? So almost all of them are leveraged. So at this point, the banks are like, no, we're not too keen on lending with this kind of like, level of exposure. Um, that's basically been my experience.
I'm facing a similar one. We work with a local credit union to do commercial portfolio refis. We did our first one in November. We're trying to do our second one this past month. They're still working closely with us. They have all of our information, personal financial statements, all of our documentation. They're ready to roll once the moratorium's lifted, but they're not lending right now. I spoke to another investor this morning, and it sounds like there is a local bank doing commercial refinances right now, but they're only offering 15-year AMs at this point.
Wow. Have you guys run into issues where, even though you have like government guidelines to accept like delayed mortgage payments, some banks won't do it? It's kind of, I guess this is applicable only for like Fannie Mae, Freddie Mac loans, right? But if you're on like an in-house note, I think banks have the complete right to say, no, we just want the payments as is. Have you guys run into that situation yet?
I haven't requested any myself.
Yeah.
Yeah, I haven't requested any either.
Yeah, me neither. So for me on the lending side, like I mentioned, I have a lot of these properties on, big lines of credit. So I'm trying to refi, and Nick and I, we were trying to use the same lender. Unfortunately missed the cutoff, but hopefully they'll lift the moratorium. I have actually used them for like 5 different products, whether it be lines of credits or portfolio lending. So I have a good relationship with them, but obviously it wasn't enough to, push through or lift the moratorium. But yeah, that's probably another lesson learned, is that you want to make sure that you have that financing kind of set in place. But, I don't think any of us could have foreseen how quick and swift like this would have applied across the banks. So like I reached out to probably at least 10 other banks so far, and everybody said the same thing. It's like, hey, word on the street is like May 1st is when they're going to kind of start looking at it again. But that obviously could change with everything that happens from when I talked to them last Thursday to May 1st. However, so you just got to be prepared for that as much as I can. Right now, I personally don't have an answer of exactly what I'm going to do. Probably may have to raise additional private capital if I need to finance some of my certain properties that it's on a line of credit where the aging process is all different. So the first one that I bought on it was last July, and the last one I bought on it was this past February, right? So each of them are going to age at their 18-month mark differently. So I got to figure out what I want to do with the July one. But so far in my real estate career, I have bought about 7 properties on terms. And if I do any more acquisitions, that's what I'm going to be looking to do, is buy on terms, because I really thought about it from the other side, like me selling, right? I'm selling my flips, or if I end up selling any of my rentals, I would actually right now be open to selling on terms, right?
Yeah.
So from that other flip side, there might be other investors who are looking to sell their portfolio either because they were going to exit anyway, or they want to, just get some cash flow, but they don't need to capture. Maybe if they were trying to get 30K in equity, maybe they're okay with 20K in equity now with everything that's going on.
Right.
So my focus is going to be kind of doing some marketing or reaching out to brokers to see how I can get some activities on terms if I am doing any acquisitions that way. Any more ideas or thoughts on the lending side, guys? Anything that our listeners can kind of do in terms of actionable items?
I was going to say one thing related to our specific portfolio is we always, similar to you, Bo, wait to do maybe every 9-10 properties and then refinance. It doesn't really affect much though if we were to do every 3 or 4. It's just a little more paperwork, and we try to limit the amount of administrative burden it puts on us. But moving forward, we're now going to try to start doing, hey, every 4 or 5 properties, we'll just quickly refi and do that, because we've had plenty of properties that have been sitting there. They have a lease in place. We could have easily refied, but we were just waiting. So I think learning from this, we'll probably just do it a little more frequently moving forward, just to help ourselves out.
Yeah. No, I like
the other
that.
piece, and I just want to touch on it. I actually have a buddy who's just starting out, getting started in real estate investing, and all of us are coming at this from a very different perspective than I would say the average real estate investor. And I don't know the demographics necessarily of this particular show, but if you're still in a position where Fannie and Freddie loans are easy to get, that's still something that's very, very feasible. My buddy's actually closing on four different properties on the same day using his first 4 loans with Fannie Freddie, and it looks like that's going to go through no problem. So if you're kind of starting out, it's one of your first couple of investments, it's still very possible. All of us are talking more about commercial loans, which have largely dried up, but the actual Fannie Freddies are still being made out there.
Yep, that's a great point, Nick. Thanks for bringing that up.
And
So it sounds like seller finance and Fannie and Freddie are the way to go right now.
Yeah, I got to tell you, my seller finances are working great for me right now. Nobody's doing capital calls or anything, so I'm feeling good.
Dan, you had a thought?
Yeah, I was just going to say we finance almost all of our properties using private financing with people that we have relationships with, and so we typically sign a 1-year note. We have historically refinanced them off in about 4 to 6 months, but that's why we do sign the 1-year note with them, to give us a little bit of leeway if something were to go wrong or happen. So those are conversations. Some of those notes are somewhat coming due pretty soon. So those are conversations that we will have with those investors. Hey, would you like to extend this note further, or would you like to get refinanced off, and we'll use other funds to pay them back. So we'll give them the option, but that's something that we've never had to do. But it's something that we'll just have to pivot and see what works best for both sides.
Yep, definitely. And I think that's a good segue to the next topic, which is how can we make best use of this time right now, where a lot of us are working remotely, staying at home. So we're probably not going out hanging with friends or being out and about on the weekends like we usually do. So how can we take advantage of this for new opportunities that will be in front of us a couple months down the road, right? So whether, like you mentioned, maybe it's another time to really take a look at your portfolio and then brush up on that, pitch to private investors or renegotiate terms with them, because, what are their alternatives, right? Is it in the stock market right now, or, maybe taking a point or two off of your private notes. However, it's a little bit more steady, asset backed, things like that. Or is it more education on the direct marketing piece, buying on terms, learning how to, do your own rehabs? I don't know. So what are your thoughts on all of that?
I know it's not a fun answer, but Kelly and I took this time to clean up our documentation, our processes. So one thing that we've been doing is we've set aside a couple hours a day to update Stessa. We've had legal structuring calls with our attorneys, we've had tax planning and structuring sessions with our CPAs, reviewing our property taxes, seeing if we can appeal any of those, updating our business plan, investor slide deck. These are all things that we don't normally focus a ton of time on. We've had them set up, but we haven't really refined them. And so we've spent quite a bit of time focusing on just refining the process while we have time available that we're just sitting at home. And then we've also identified some cost saving opportunities on our personal finances as well. It's not all about the business. It's where can we cut back personally? Are there any saving strategies that we can put towards our reserve accounts? So that's one place that we started working on during this time.
I think that's all really important stuff. I've been doing the exact same thing, getting my documents in line. It's not something that I've been terribly good at. Found some new software that I'm using that I think is pretty darn cool. The other stuff that I think is really important during this time is to network. Like, honestly, my conversations with the people in this group and a variety of other groups have been extremely, extremely valuable. You never know when, Mahir is going to have the best best possible wholesale that you might want to pick up or something like that. And then kind of the last piece for me is like you were talking about, Bo, work on your personal branding. That's definitely been something my wife and I've been working on. Make yourself an expert in whatever your particular field is, so that when the right opportunities come about, you're the first person people think about. So what that's looked like for us is we've been writing a lot of blogs. I've been interviewed on several podcasts, so that when the right opportunities come about, I'm going to be an expert. I can point, hey, look, I was interviewed on Millennial Real Estate Investor. I was interviewed on bigger cash flow, and I've got all these articles. I'm clearly an expert. Do you want to trust $100,000 with me on this next project?
Yeah. I think, you are kind of like your own, this is me when I first started out in consulting for my W-2 job from my CPA firm, is that they said, hey, you work for XYZ company, but you are your own consulting brand. So I didn't really understand that at the time, but now it makes much more sense, is that, hey, what you do to educate yourself and your knowledge, because obviously, as Dan probably knows, not all CPAs are alike, or not all engineers are alike, right? You might have 4 years experience out of college, 10 years experience out of college, working for, maybe you guys both work for Boeing, right? But the knowledge that you gain and the expertise that you refine in that 10 years is going to be different from person A to B. And I think Nick brings up a great point, is, you kind of focus on that. And you also have to kind of really tell your story. So, for those people who are looking to raise private capital or do some deals with other partners and things like that, maybe you do have it all up in here, but if you can't really articulate it or present it in a way that's really meaningful for the people that you're trying to work with, it's not going to work. So I think, Nick, you bring up a great point. Those are definitely things that you can work on during this time.
Not self-branding, just on this call alone. I mean, anytime I have seller financing questions or any other investors reach out to me on it, it's not something that I'm super well versed in, but I send them over to Nick. And working with new investors, explaining the process. Bo, you do a great job of laying all that out for new investors. Like, I know when I was starting out, it's one of the first places I went to. And Mahir, having that local knowledge, he understands the rehab side. He knows what's going on in Indy. I mean, those are 3 awesome resources right there that people can quickly reach out to. So it's something that I need to personally work on. I've been spending so much time building our own portfolio and making sure that we're stabilized before I start taking that next step. But that's something that I want to work on, and so does Kelly as well moving forward.
Well, and let me just punt it right back at you there. If you're looking for getting a better understanding of raising private capital, Dan is your man. I've never seen a better guy at that.
Thank you.
I love it. Dan's like, tell me more.
That's it, Dan. That's all you get.
It's like, that's it.
We're not paid enough for this.
Well, I think we covered a great deal here. Hopefully this was a ton of value for our listeners. Before we wrap things up, I guess I'll take a circle around the room, starting with Nick, if you guys want to kind of add anything before we wrap up.
Yeah, just I want to reiterate, it was something Dan said, and it's been talked about a couple times here on the call. Focus on what you can control. This entire situation sucks, guys. There's no way around it. It's a giant CF, but at the end of the day, we're gonna get through it. Focus on what you can control. Get as much sleep as you can, and just try and be out there and do the right thing in everything you do. And generally speaking, it'll come back to reward you in the grand scheme of things.
I would say this is a difficult time where you can either retreat and be hesitant to make moves and let other people take down the deals, or you can use it as an opportunity to learn and grow as an investor. This is one of the best real life stress tests you can face to see how your systems and your investment criteria actually hold up. So take a step back, see how you did, and pivot accordingly, and make sure to try to have some fun while you're doing it. I mean, it's not all bad news. I know a lot of people are focusing on that right now, but try to have some fun with it. Real estate's a great long-term game.
I hate going last. You guys took away whatever I had to say.
Hey, I'm last.
But I think the one interesting aspect, like I try to find something cool about this whole situation, right? It sucks, but the thing is, if we achieve our dreams, or when we achieve our dreams of financial independence, this is kind of what our life is going to look like. You're not going to go to your job. You'll be at home. trying to figure out what to do next with all the money that's coming in, right? So it's kind of like that experience right now, and I've just been utilizing it to like hone my skills, sharpen my tools. I work as an automation engineer, so I've been like automating a lot of my process right now, which I find a lot of interest in doing. So I'm kind of enjoying this. The casualties and all this kind of sucks, but I think trying to look at the positive aspect of this whole situation, I think it's just a huge learning curve for us. For all of us that we've been questioning how did people in 2008 fare. I think we have the answers right now, and I think going forward we'll be better prepared to face something like this.
Yep. No, like, yeah, echoing what you guys all said, again, control what you can or focus on what you can control. And then for the other aspects of, just real estate investing, I feel like Nick brought up another good point. Networking during this time is, a lot of people might be fearful or panicking. Just go find some investors who are a couple steps ahead of you are, like, how we talked to Zuber back in February, and just like pick their brain. Or like, I like to talk to Nick and Dan because we were both going through commercial refis. I know that if, even though I call 10 different banks, maybe Nick and Dan knows that 11th banker who's going to get me that refi. Wink, wink over here. No, I'm just kidding. So, just definitely be networking and talking to other people. We're all in this together, and there's different strategies and there's different ways to get across. So just make sure that you guys never stop learning, and also just share those best practices and pay it forward to the other investors as well. So that's why we're here.
Love it.
Well, hopefully that was helpful to you guys. If you thought that was good stuff, please do us a favor and leave us a review on iTunes. We'll see you right back here next week for another exciting episode of the Bigger Cash Flow Podcast. Thank you for listening to the Bigger Cash Flow Podcast. Please remember that opinions of the guests are their own, and nothing on this show should be considered personal or professional advice. Please consult your tax, legal, or financial advisor for personal advice that fit your unique situation. See you next time.